Well, hello everybody, it is October 11th. This is the weekly review for the 9th, and let's get started here. What did we get last week? A huge gallop to the upside. You can see the numbers. Small caps up 6% in a week, 4% across the board pretty much everywhere else. Taking the gains on the year, if you're looking at bonds, TLT itself, gold, or any of the equity indexes, huge gains. Russell almost back to even at this point. It's been a rampage to the top side, and it was broad-based, massive rally. Almost any sector you look at, anywhere from 6%, 7%, on down to roughly the 3s and 4s across almost everything. If you look at last week, last week we said this is kind of a critical point. It's one of those junctures in the road where, one side or the other is going to probably take advantage pretty soon. And this is what it looked like, right? You could have an ABCD to the downside, an ABC to the upside. It was a question of which way it wanted to go. Now, we knew trend was up overall in the longer term time frames. And when we look at how it got resolved, it was resolved to the upside, and so it was a breakout to the upside. Target hit now, top of this breakdown bar. We're there. The bullish retest regen now is up underneath. You have a next target up at the highs, essentially. And the question is like, how do we get there? Now, you can imagine multiple ways to get there. One simple way would be to get some sort of a retrace here, back into this bullish retest regen, and then regen higher again. That would be one particular place or one particular case. The strongest case here is that you just keep going, right? This thing maybe pauses a little bit in this area, but just works its way on up and doesn't really give you the retest regen, doesn't come back that deep. That's the strongest case. And a lot of times where you see these very typical bull moves, and you only have to look back over here where the breakout was here. You got a little reset there, congestion, and then a continuation to the upside. I wouldn't be surprised if this thing just doesn't even give you the retest regen, just consolidates, or maybe even goes a little bit higher first, right, and then comes back to consolidate and then pushes on up to the upside. So don't necessarily, because there's a retest regen there, it doesn't mean it's going to come back to hit it. It just says that if it does, it's probably going to get bought. That's what it really tells you. And so at this case, it's like, okay, this market, given what just happened up here in terms of the broad-based move, right, this market could just move higher. If you look at the weekly, we did have a break of this swing point high on the way down. That says that we should have a range. And so again, we could move to the highs and still just be in the range. So there's no reason that we have to retrace here. We could simply go to the highs and then congest up there. And if this thing's really as bullish as it's trying to be, you could just break out from there. So we may see that kind of a case. Whatever preconceived notions you may have, recognize that this market at this point has shown us that it's extremely bullish, doesn't want to come back in anymore, and could just tear to the upside. And an example of that is in the Russell, right? It's just an absolute breakout. So if you look back here at the S&P, well, this chart, right, the highs are up here, right, the September highs. Now look at the Russell. The September highs surpassed, as well as the August. It's all the way up to new highs. It's just an absolute risk-on type situation. And again, this type of environment lends itself well to a continuance. We're in that part of the year where that can happen. And I know there's all these issues out there. Believe me, I'm as aware of them as you are. But this market is speaking to us, and is speaking very bullishly at the moment. What's the bottom line? In my opinion, you just have to expect higher highs. I mean, that's the way this thing is set up. Again, as I said earlier, we kind of remarked last week that we're at that crossroad. The market's just telling us that up is the direction again. The only question in my mind is how fast. Strong moves, when you got a strong market, it doesn't allow you easy entry. So expecting a retrace may or may not happen. If I had to put the odds on it, I'd say maybe a 30-40% chance of a retrace. This thing looks to me like it's going to just grind its way on up to that target area and then consolidate, maybe get a push down, but consolidate and never even come back to that retest region that's down here. Weak moves do give you that, and so if we do get it right, that will say this is weaker than at least I'm expecting right now. Neo always tells us follow the trend. Trend is higher, has been higher, continues to be higher, has been on the intermediate, on the long term. Now the short term is trying to feed back into the higher case. Implication is you got to get on board if you're going to ride this thing. And the near-term catalyst, if you look at them, they're all still out there. You got the earnings that are about to hit. You got the stimulus deals that they keep talking up. You got the election concerns. All of these things are factors. How we react to them is what's happening. And so if you think about what's happening, right, election concerns, maybe they're not as much of a concern. Stimulus deal, that's kind of baked into this market one way or the other, either before or after the election. The only thing that really we don't know how it's going to react yet is these earnings. And if we see those turn bullish as well, then again, this market probably won't even back off if that's the case. If I look at the portfolio on the TA Today site, right, if you pop over, look at the orders and positions, you can see we only have 3 positions on at this point. I had whittled them down, not willing to take the risk into that decision point last week. It turns out that wasn't good because we had bullish positions on that we took off. So now the question is like, how do you get back to where you were? Right now we're about 10% invested, so the cumulative open position size of that portfolio is about 10%. Had a big gain year to date, not bad. Only 3 positions. Need to be around 50 or 60 at least at this point, the way this market is looking. And so we're going to have to find a way to get those positions on. And so if you think about that and think about how you do it, right, one way to do it is ETFs. Another way to do it is just individual positions. While you're coming into earnings, individual positions have a lot more risk. And so you can use the ETFs. Well, let me bring that back over. You can use the ETFs to get yourself that kind of exposure, if you will, and not have as much risk associated with it. And so, where to focus is part of the question. I think the gold stocks, the whole precious metals, basic materials, almost anything you look at has a good profile at this point. The broad market exposure has the least risk. So if you go into like the XPXL, the TQQ, or just the SPY, the QQQ themselves, if you don't want to leverage up, that would be a way to get the directional long exposure without a lot of risk, and to do it immediately, right? My plan is to do this type of exposure sometime this week. I will probably start on Monday, and we'll add 2 things as the week progresses, because we may get a little retrace to start the week. If we don't, and I put some on here and it keeps going up, I'll just have to put on more, because my expectation is it's going to get the target, consolidate at target, and eventually break higher. And whether we get the retrace before we move to target is an open question. As I said earlier, I don't think the odds are extremely high that we get that case, but it is a case. And so you put on some exposure and you put on more if it happens. Last week, if we look at what happened, it was much better than expected. Even the bullish case wasn't bullish enough. Here's what I think this week looks like. We may get a little dip to start the week. I'd like to add some exposure immediately. Worst case, we probably just come down to a retest and regen. Best case, just run straight on up to the highs. That's the way it's looking for me. I hope that you're positioned at least on the long side, if not long enough, and just add that exposure as the week progresses. Have yourself a great one. Stay safe out there, and I'll talk to you next time.